Good morning, it's Jonathan Barratt with the War Report. That's the week ahead report. This report covers all the major leading indexes or just economic announcements which are due out over the coming week. It also tries to set a trend as to what we feel is going to occur over the next 5 trading days. Week ahead report, the War Report. Okay, well let's so we get ourselves into the mood. Let's have a little bit of a wrap as to what happened. Particularly on Friday night's trading. And it was a really interesting night, as you can see, just by having a look here. Obviously the Dow was under pressure, it was down 90 points at 11,192. The S&P was off 14, the Nasdaq was off 37. I guess there's a lot more concern there over what's happening, obviously with Ireland, the debt crisis in the euro, having a little bit more of an effect on what's really happening too, how people are going to treat the currency, particularly the dollar. Also concerns G20 as to what's happening with currencies there. Obviously a little bit of a brawl, and I think there's some trade-related issues coming out of that, and I think that's going to be quite interesting. Well, it certainly has affected the commodity markets, and you can see why when we go through the summary. The top 50 in Europe was down 8, FTSE down 18, the CAC was down 36, the DAX up 11. The local market was down 19 at 4,689. But just have a look at what's happening with the commodity space, and this is what I think it's going to be. It's actually a little bit frightening because we've seen a massive move down. Look at Brent. Brent crude was down 2.47%. West Texas down 2.9 at 84.88. And just look at that. Look at that, all red except for wool. I guess some of the biggest moves there we've seen is sugar absolutely trunched down 11, nearly 12%, 26.21. Cotton down 5. 3.4%, corn down 5%, all a very, very negative picture. And a lot of it's got to do with what's happening in China. China in itself has got concerns on its inflation, starting to move interest rates higher. The data we had out during the week indicated that they will continue. There is a real concern there on food inflation, and if that starts to get out of hand, then we will be importing that food inflation on the rest of the world. So it is a concern. Also concerns there on the currency with what happened there, and China has indicated, well, early Friday we actually heard that they were looking to soften their approach to demand. And if that's the case, then that certainly saw a reversal of fortunes across the board for our commodities. Copper in itself down at 3.26%, gold is down 2.6%, and silver down 5%. A very large move there for that. But what does it all mean? And I think this is the interesting thing. It's something we've talked about. I think it's for the last 2-3 weeks, this movement of commodity prices being too high and their inability to be able to pass through the economies. And I think that's exactly what's happening and starting to happen. And I think it's actually good that we're seeing a realignment of commodity prices, and that's something which we've been looking at for some time and, of course, advised a lot of our clients as well. Let's just move on here and have a look at some of the piecemeal. Just a couple of bigger moves. Obviously, the first one here is Aussie, and I think the Aussie market will be affected with what's happening in China. We can't get around it. Here's this movement on the Aussie. We're short Aussie and have been for a while. That can come all the way down to that lower end of the range there, quite comfortable down 96, 97. And the Aussie does like that. That's how it moves. It moves in up the stairs and down the escalator. And before you know it, it'll be a lot lower. But we're comfortably sitting there with our short Aussie long US dollar positions. Now just have a look at some of the other primary input ones, because this is where I think it is quite intriguing. Look at crude, 84.73, failed on the top side to move on. We're up around that 88. We couldn't really see why that would occur, but it just did. That puts up a double, triple top, so I think oil can come back. Same as well when I look at copper. Copper I would like to come back. We still have a concern there in terms of supply-demand, or in fact demand, but that sort of correction there is underway, will be helpful. Look at the dollar index. As we know, we're long dollars. We're feeling that whatever happens in Europe, that will have some flow-on effect, but when I this sort of trend, I'm buying dips. Great divergence. Look at the divergence here and there. That to me indicated a very strong movement towards the US dollar. And look what's happened to gold, 1368, coming back there nicely, and expect that further losses there. That will affect our market, the local market, 46.89, 47.20. Everyone knows it's a key point for us, and we've failed. And I think that if you haven't put some hedge on, then I'd probably think about doing it. The reason you would do it is because given where the market is now, I feel that we can sit down to 600 and maybe even a lot lower. So I'm actually feeling and probably anticipating that the right way to go at the moment is to actually impart and put hedges on. Okay, but let's see what happens. Alrighty ho, so that's on that front. Let's look a quick look at the Dow, see if we can get any lead out of that, and then we'll go through the calendar. There's the Dow. First sign. Now that's a lot building up there, and I think you'll find that if we take out that area there, then that Dow can go a lot lower. Don't wish to put numbers on it, but obviously that's the first line of support here, 10,600, and I probably expect look at the divergence here. You can just mark it 1, 2, 3. This market's going lower. Okay, let's see how that unfolds. Anyway, let's quickly go through what we've got, the big numbers. Monday, the most important one, US retail sales. This week, we're going to set ourselves up for a lot of inflationary type data this week, so the market will trade like that. We are expecting, obviously, lower inflation. Lower inflation is not going to be good because that will be more of a concern for Ben in terms of his deflationary pressures, which he wants to try and get out of. And if that is the case, then the stimulus is here, it's with us, it should help. Hopefully it's a blip, but it will be a concern. Okay, so in the States we've got advanced retail sales, business inventories. We've got IP out of Tokyo, which is going to be very important. New motor vehicle sales in Australia, all very important there. And when you look through on Tuesday we've got CPI data out of Europe, particularly the UK, most important, RPI as well. Producer prices in the States. IP as well, and capacity utilisation will be widely watched. Remember, we've had bullish data out of China, so let's got to see what the West does. And I think that, to me, will give us a good indication. The globe's running at a two-speed economy, there's no doubt about it, and the US are the ones which need to be a little bit more in control and robust in terms of getting themselves going. Okay, Bank of England monetary meeting minutes are available on Wednesday, and in the States, the big numbers there, CPI, housing starts, building permits, and you can see that's going to be very, very important. In fact, I think Wednesday is the big billing for this week. We do have a little bit of data out on Thursday, continue and leading indicators, but I think when I go through the numbers, I think Wednesday will be the big biller this week to see exactly what happens from there. When you go to Friday, we do have leading indicators in the States. Sorry, that was Thursday. Friday in Australia, not a lot of data there. But we do have weekly wages in Oz as well. But I think Wednesday's the big billing, and that should be the big one for the week. So it's going to be it's going to be packed full of fun. There's no doubt about it. Quite a lot of challenges out there. There's no doubt about it as well. So let's just see how it unfolds. We are tipping for those data, hopefully to be at the lower end. We are still long the US dollar. We still feel there's more in there, and of course we're short some of the commodities, and we also have a hedge on some of our equity portfolios, because we feel that things are not looking that good. Anyway, but that's about it from me from the Week Ahead Report. Feel free to give us a call, to have a chat, talk to anyone if you've got any concerns on anything, and we'll take it from there and have a good week, and we'll talk to you during the week.